2005. Inside a dimly lit office in California, a man with an unshaven face, headphones on, and an unrelenting focus on numbers no one else cared about sat hunched over his computer. Michael Burry didn't look like a Wall Street hotshot. He wasn't one. But at that moment, he was staring at something that would change the course of financial history. He saw the cracks in the housing market that were invisible to even the most seasoned investors. Wall Street laughed at him. The banks ridiculed him, but he didn't care. Because Michael Burry wasn't in the game for prestige, he was in it for the truth. And the truth was terrifying. This is the story of the man who bet against the American dream and won. Michael Burry was never like the others. Born in 1971 in San Jose, California, he was a quiet, introspective child. At the age of 2, he lost his left eye to retinoblastoma, a rare form of cancer. For the rest of his life, he wore a glass eye, a detail that would become a metaphor for the way he saw the world differently. His childhood was defined by curiosity, intelligence, and a deep sense of solitude. While other kids played outside, he was indoors, devouring books on science, history, and later the stock market. Numbers fascinated him. Patterns seemed to reveal themselves effortlessly to him, a skill that most would only recognize years later. His parents noticed early that Michael wasn't interested in fitting in. He was socially reserved but mentally sharp. It wasn't that he was disengaged from the world. It was just that the world didn't seem to understand him. One of his earliest fascinations was the concept of risk and reward. He played chess obsessively, not because he loved the game itself, but because he loved the idea of strategic thinking, planning moves ahead, seeing patterns others couldn't see. This skill, though seemingly unrelated at the time, would later define his entire career. As he grew older, Burry's interests evolved into finance and investing. Unlike other teenagers who spent their time playing video games or socializing, he was captivated by the stock market. He read every investing book he could find, from Benjamin Graham's The Intelligent Investor to Warren Buffett's Letters to Shareholders. He became obsessed with the idea that the stock market was full of inefficiencies, and if one looked hard enough, they could find hidden gems. At school, Burry was an exceptional student, but had little interest in anything outside of his studies. Teachers admired his intelligence, but they worried about his social isolation. He wasn't bullied, but he wasn't embraced either. He was simply different. Too analytical for casual conversation, too deep in thought to care about teenage drama. His parents encouraged him to follow a stable career, one that would offer him job security and a clear future. Medicine seemed like the obvious path. He had the intelligence, the discipline, and the patience to succeed. But deep down, Burry knew his true passion lay elsewhere. Despite his love for investing, Burry didn't set out to be a finance mogul. His parents pushed him toward medicine, a stable and respectable career. He attended Vanderbilt University School of Medicine and later took a residency in neurology at Stanford. But even in medical school, his mind was elsewhere. While his classmates studied late into the night, Burry spent his spare time immersed in financial reports and stock market analysis. He didn't just see stock prices, he saw underlying stories. He could tell when a company was undervalued, not just by looking at numbers, but by reading between the lines of financial statements. It was a gift, and he knew it. His time at medical school was challenging, not because of the coursework, but because of the internal conflict it created within him. While his peers were dreaming of careers as top surgeons or specialists, he was dreaming of stock market trends, company valuations, and the unseen forces that moved financial markets. During his medical residency, he began posting stock ideas on internet forums, particularly on sites like Silicon Investor and The Motley Fool. His analysis was razor sharp. He was making calls on companies that no one else was looking at, and more often than not, he was right. His posts attracted attention from experienced investors who were stunned by the depth of his insights. His ability to break down complex financial data into simple, compelling arguments made him a standout voice in online investing communities. Slowly but surely, people were starting to take him seriously. Then, something unexpected happened. Hedge fund managers and wealthy investors started reaching out. They wanted to know more about the quiet doctor who seemed to have a sixth sense for stocks. Burry, still balancing his medical career, was at a crossroads. He had spent years pursuing medicine, but finance was calling him louder than ever. Eventually, he made a bold decision, one that would change his life forever. In 2000, Burry made a life-changing decision. He walked away from medicine and launched his own hedge fund, Scion Capital. With no formal finance background and no Wall Street connections, he started with $1 million in seed capital from early believers who had followed his online posts. They trusted his unique way of analyzing the market. Burry's strategy was simple yet brilliant. He focused on deep value investing, identifying stocks that were severely undervalued but had strong fundamentals. While tech investors were chasing bubble-driven stocks, he focused on companies that Wall Street had ignored. The results? Spectacular. Between 2000 and 2005, Scion Capital returned nearly 300%, crushing the S&P 500. Even during the dot-com bubble burst, when most funds were losing money, Burry was making millions. Investors lined up to give him money. But Burry wasn't in this for the glamour. He ran his fund from a quiet office in California, often working late into the night, alone, listening to heavy metal music while poring over balance sheets. Then one day, he stumbled onto something that would change his life forever. Michael Burry's success with Scion Capital had already proven that he was no ordinary investor. But in 2003, his curiosity led him to something far bigger than just undervalued stocks. It was in the seemingly untouchable world of real estate mortgages, the backbone of the American economy, that he found a flaw no one else saw. At the time, the housing market was booming. Banks, investment firms, and the media all agreed. Home prices only went up. Mortgages were easy to get, and people were flipping houses like lottery tickets. The general belief was that real estate was the safest investment on earth. But something felt off to Burry. As he dug deeper into mortgage-backed securities, the financial products tied to home loans, he started noticing disturbing patterns. These securities were being packaged and sold to investors as AAA rated, the safest possible rating. But upon closer inspection, Burry discovered that many of these loans were given to people who had no ability to repay them. The numbers didn't lie. Default rates were rising. Homeowners were taking out massive loans with zero money down and artificially low interest rates. And yet Wall Street remained blindly optimistic. Burry wasn't convinced. If the housing market was truly safe, why were so many of these loans on the verge of default? What happens when millions of homeowners realize they can't pay their mortgages? The answer? The biggest financial collapse since the Great Depression. Burry was now on a mission. He knew he had found the Achilles heel of the financial system, but the challenge was figuring out how to profit from it. His solution? Credit default swaps. Credit default swaps were essentially insurance contracts against mortgage-backed securities. If these securities failed, if the housing market collapsed, Burry would get paid. In 2005, he marched into the offices of Goldman Sachs, Deutsche Bank, and other Wall Street giants, demanding to buy hundreds of millions of dollars worth of these swaps. The bankers thought he was insane. They smirked as they signed the contracts. To them, Burry was throwing money away. Housing never crashed. It was free money. But Burry knew something they didn't. With every deal he signed, he was stacking the odds in his favor, waiting for the inevitable. But there was just one problem: time. Burry wasn't just betting against the housing market. He was betting against Wall Street itself. And when you bet against powerful institutions, you become their enemy. His investors, initially thrilled with his stock market returns, began turning on him. Months passed, then years. The housing market still hadn't crashed. His investors saw millions of dollars in premiums going out the door, and they started demanding their money back. Emails flooded in. Phone calls turned hostile. People he once considered allies began doubting him. "You've lost it, Michael. You're throwing away our money. Housing is fine. You're wrong. Admit it and stop the bleeding." But Burry refused to back down. He blocked redemptions, locking investors' money in the fund against their will. He wasn't going to let them pull out, not when he knew he was right. He stopped taking calls. He shut himself in his office, poring over data, tracking every mortgage payment, watching the inevitable unfold. He knew the storm was coming, and then it hit. In 2007, subprime mortgage defaults skyrocketed. People who had bought homes with bad loans started missing payments. The cracks in the system turned into earthquakes. By 2008, Lehman Brothers collapsed. The global economy went into freefall. The housing bubble had burst, and Michael Burry's bet had finally paid off. Scion Capital made $700 million for its investors. Burry personally pocketed over $100 million. The same banks that once mocked him now owed him millions. Wall Street was in ruins. The U.S. government had to bail out the very institutions that ignored his warnings. The crisis destroyed millions of jobs, wiped out retirement funds, and forced thousands of Americans out of their homes. And yet, Michael Burry was never thanked. He wasn't celebrated as a hero. In fact, he was seen as a villain, a man who bet against America. But he didn't bet against America. He saw the truth before anyone else did. After the financial crash, Burry didn't enjoy the victory. Instead of being praised, he was attacked by investors, the media, and even the government. People blamed hedge funds like his for profiting off of a disaster, ignoring the fact that he had tried to warn everyone. Disillusioned, he shut down Scion Capital in 2008. He disappeared from the public eye. For years, Burry was silent. No interviews, no press, just quiet investing in private, but the world hadn't forgotten him. His story was later immortalized in Michael Lewis's book, The Big Short, and later, the Oscar-winning film starring Christian Bale. Suddenly, the world knew who he was. By 2024, the world expected Michael Burry to do what he had done best, bet against the market. The media loved calling him the man who predicted the 2008 crash. And every time economic uncertainty loomed, people looked to see if Burry was shorting again. But this time, Burry wasn't shorting. He wasn't betting on a crash. He was doing something that few expected. He was buying. A contrarian approach at a time when the global economy was unpredictable, when fear dominated the headlines. Burry was placing huge bets on Chinese technology stocks. While many investors feared regulation and geopolitical tensions, Burry saw something different. Undervalued companies with strong fundamentals. His largest holdings in 2025? Alibaba, JD, Baidu, Pinduoduo. Instead of shorting the American market, he was diving deep into Chinese tech, seeing opportunities that others ignored. While Wall Street panicked over volatility, Burry saw companies trading at historically low valuations, yet still dominating massive industries. It was another contrarian move, one that could either make him a fortune or leave him isolated once again. Burry's philosophy had never been about picking crashes. It was about identifying mispriced assets. In 2005, that meant shorting the housing market. In 2025, that means going long on Chinese technology and healthcare stocks. It isn't the apocalyptic short everyone expected from him, but it is still a bold, deeply contrarian bet. Will he be right again? Michael Burry had been ridiculed before. In 2005, when he shorted the housing market. In 2020, when he bet against Tesla. In 2023, when he shorted the S&P 500 and NASDAQ. Now, in 2025, as he loaded up on Chinese stocks and healthcare investments, the same skepticism surrounded him. Many believe China's tech giants are too risky. Some think Burry had lost his edge, but Burry don't care. He had never been in the game for validation. He had built his career on seeing what others ignored. And once again, he is making a bet no one else is willing to make. Is he right? Only time will tell. Why Michael Burry's story matters. Michael Burry's journey isn't just about finance. It's a lesson in conviction. It's about trusting your own research, even when everyone says you're wrong. It's about seeing what others refuse to see and having the courage to act on it. Because in the end, history doesn't remember the ones who follow the crowd. It remembers the ones who dare to stand alone. If you found this video insightful, don't forget to like, subscribe, and hit the notification bell for more investing stories from other great minds.